All right, let's talk about what just happened this week. While everyone's watching XRP consolidate and panicking about regulatory delays, Ripple just secured full approval to operate across the entire European Union, unlocked another billion XRP without the market blinking, and announced the community event that's going to set the roadmap for the year. And XRP didn't tank, because the fundamentals are still there. Ripple just executed its monthly escrow unlock. 1 billion XRP tokens, worth over $1.5 billion. And everyone expected this to nuke the price, except it didn't happen. Here's what went down. The unlock happened across 4 transfers. Within hours, Ripple relocked most of it back into escrow. Net result? Around 300 million XRP unlocked for operational use this month. Not a billion, a fraction of that. This monthly unlock pattern happens every single month. It's been standard procedure for years now. Yet retail traders still panic every time they see the headline, Ripple unlocks 1 billion XRP. They don't read deeper, they don't understand the mechanics. They see 1 billion and immediately assume selling pressure is about to flood the market. So they panic sell, and institutions? They're buying that panic. Because they understand something retail doesn't. Ripple needs operational liquidity to fund partnerships, pay employees across multiple countries, support ODL corridors that require market-making capital, and scale infrastructure investments. The unlocked tokens aren't dumped on exchanges in a single transaction. They're deployed strategically over weeks through OTC deals, institutional partnerships, and treasury operations that don't hit public order books. Institutions know this. They've been tracking these patterns for years. They know exactly how Ripple deploys capital. They know most gets relocked. They know what's released gets distributed gradually through channels that don't create immediate sell pressure. Retail doesn't know this. Retail sees the headline and panics. That's why wealth transfers from retail to institutions during these events. Every single month, the same dynamic plays out. Whale alert posts the unlock. Retail panics. Price dips. Institutions accumulate the dip. Price recovers within days. Rinse and repeat. It's the most predictable pattern in crypto, yet retail keeps falling for it. But here's the context everyone's missing. XRP just came off a brutal January, down over 10% for the month, hit a low around $1.50. Sentiment was fragile heading into the new month. Crypto investment products recorded massive outflows. Bitcoin dropping, Ethereum falling, Solana getting crushed. Everything red across the board. Macro conditions deteriorating. Liquidity drying up. Risk off everywhere you look. This was the perfect setup for a panic sell-off when the unlock hit. All the ingredients were there for XRP to break support and cascade lower. Except XRP didn't collapse. It dropped slightly in the first couple days, tracking broader market weakness, then stabilized. That's consolidation, not capitulation. That's a market that's found support and is holding it despite negative macro conditions. And it tells you something critical. The market doesn't panic on monthly unlocks anymore. The market has matured. Institutional buyers have figured out the pattern. They know this is temporary selling pressure from retail who don't understand the mechanics. So instead of joining the panic, they accumulate. Instead of selling support, they defend it. That's the difference between sophisticated money and dumb money. Dumb money panics on headlines. Smart money buys the panic. Meanwhile, David Schwartz dropped a reality check that the Moonboy crowd needed to hear. Ripple's CTO emeritus pointed out something that should be obvious but apparently isn't. If rational investors truly believed XRP had even a modest chance of hitting $100 within a few years, it wouldn't be trading at current levels. It would already be significantly higher as institutions front-ran that probability. Think about it. If you genuinely believed there was a real chance of a massive return within a few years, you'd be allocating heavily. Every hedge fund, every family office, every institutional allocator would be loading up. The price would already reflect that probability. But it doesn't. Because the market doesn't believe it. Schwartz's point? Current price reflects market consensus, and consensus says extreme price targets are highly improbable in the near term. That doesn't make him bearish, it makes him realistic. He's been around long enough to see hype cycles come and go. He remembers when people thought XRP would never break certain levels. He remembers selling at prices that seemed high at the time. He remembers Bitcoin at early prices seeming like an impossible dream. So he's not saying massive gains are impossible. He's saying the probability is low enough that it's not priced in. And that's important for retail to understand because it prevents unrealistic expectations that lead to panic selling when those expectations aren't met. But here's what Schwartz didn't emphasize. Improbable doesn't mean impossible. Low probability doesn't mean zero probability. XRP trading at current levels with its market cap makes it the fifth largest cryptocurrency in the world. That's already a massive achievement. For XRP to reach extreme valuations, you're looking at a market cap larger than the biggest tech companies. That requires XRP becoming the dominant global settlement layer for institutional finance. Not just a player, the dominant layer. Is that possible by the end of the decade? Maybe. The total addressable market is certainly big enough. Cross-border payments alone are a massive annual market. Add in treasury operations, remittances, security settlement, tokenized assets. You're talking tens of trillions in potential transaction volume. Is it probable this year? No, absolutely not. Building that kind of infrastructure, signing that many partnerships, onboarding that much institutional capital, that's a multi-year process, not a quarterly event. So when retail asks about extreme price targets, institutions are buying current levels because they see realistic multiples as achievable this year based on utility metrics, adoption rates, regulatory clarity, and ETF flows. That's solid returns. That's excellent for institutional money. They don't need moonshots. They need consistent, risk-adjusted returns. And XRP at current levels offers that if the fundamentals continue improving. Which brings us to the news that actually matters. Luxembourg's financial regulator just granted Ripple full approval for its electronic money institution license. Full authorization. Not conditional approval, not preliminary clearance. Full, unrestricted authorization recognized across all European Union member states. This is massive. This is arguably one of the biggest regulatory wins in crypto history. And most people don't understand why because they don't understand what an EMI license actually unlocks. Let me break it down in detail because this matters more than any price prediction or technical analysis. Electronic money institution status allows Ripple to issue and manage electronic money, provide payment services, and function as a regulated financial entity throughout the EU under full MiCA compliance. That means Ripple can now offer RLUSD stablecoin services to European banks, facilitate cross-border payments through Ripple Payments for European fintechs, and integrate with European enterprises for treasury management solutions. Every single one of those member states, Germany, France, Spain, Italy, Netherlands, Belgium, Austria, Sweden, Denmark, all of them, Ripple can operate there with full legal certainty under a single passporting license. Cassie Craddock, Ripple's managing director for UK and Europe, called this a transformative milestone that reinforces Ripple's presence at the heart of European finance. She's right, but here's what's even bigger. This puts Ripple ahead of almost every other stablecoin issuer in terms of regulatory coverage, institutional credibility, and speed of execution. Look at the competition. Tether? Still fighting regulatory battles in multiple jurisdictions. Still dealing with questions about reserve transparency. Still operating in a gray zone that makes institutional adoption difficult. Circle? They have EU approval and they're well capitalized and regulatory first. But they don't have Ripple's end-to-end payments infrastructure. They're a stablecoin issuer, not a payments company. They issue USDC, great. But they don't have ODL corridors, they don't have G-Treasury for corporate treasury integration, they don't have Ripple Prime for institutional brokerage, they don't have the full stack. PayPal's PYUSD. Limited to specific corridors and use cases. Growing, but nowhere near the scale or infrastructure Ripple has built. Ripple now has the license, the infrastructure, the partnerships, the regulatory relationships, and the execution capability to scale RLUSD across Europe faster than anyone. And here's what separates Ripple from everyone else: execution speed. Ripple announced preliminary approval for this license just weeks ago. They met every single condition set by the regulator in under a month. Think about that. Most crypto companies take 6 to 12 months to move from conditional approval to full authorization. Ripple did it quickly. That's not luck. That's institutional-grade regulatory competence. That's what a decade of building compliance infrastructure looks like. They know how to navigate regulators. They know what documentation to provide. They know what standards to meet. They know how to build trust with government agencies that are inherently skeptical of crypto companies. And that matters more than retail realizes because every regulator Ripple works with successfully becomes a reference for the next regulator. Every jurisdiction where they prove compliance becomes easier to replicate in the next jurisdiction. It's compounding credibility. It's a moat that can't be copied overnight. You can't just hire a compliance team and expect to move this fast. This takes years of relationship building, precedent setting, and operational excellence. Ripple has that. Most crypto companies don't. Before we go deeper, let me be real with you. If you're trying to understand how regulatory approvals actually translate into price action, how to separate hype from substance, how to track institutional accumulation patterns instead of following influencer calls, you need frameworks. You need mental models. You need pattern recognition skills that come from studying how markets actually work, not how they're supposed to work in theory. That's why I built a comprehensive crypto course that breaks down regulatory analysis, fundamental valuation models, on-chain metrics interpretation, and risk management strategies that work in volatile markets. This isn't hopium. This isn't cheerleading. This is how you make decisions based on data instead of emotion. This is how you think like an allocator instead of a gambler. Links in the description. Now let's connect the dots on what this EU license means strategically. Ripple already secured UK licensing from the Financial Conduct Authority. That's tens of millions of people in one of the world's most important financial centers. They received conditional approval for Ripple National Trust Bank in the United States under the Genius Act framework. That's hundreds of millions of people and the world's largest economy. Add the EU license covering hundreds of millions more across multiple countries, and Ripple now holds over 75 regulatory licenses globally, spanning North America, Europe, Asia, and the Middle East. More licenses than Coinbase, more than Binance, more than Kraken, more than any other major crypto company except possibly Circle. Every single license creates a competitive moat. Here's why this matters specifically for XRP. Every jurisdiction where Ripple operates legally is a jurisdiction where banks and payment firms can integrate XRP without compliance risk. A European bank considering XRP for ODL settlements can now do it under full regulatory supervision. A German fintech wanting to offer RLUSD services can partner with Ripple without legal uncertainty. A French payment processor exploring blockchain rails can use Ripple's infrastructure knowing it meets EU standards, passes regulatory audits, and operates within established legal frameworks. That removes the biggest barrier to institutional adoption: regulatory uncertainty. When a bank's compliance department evaluates a crypto partnership, the first question isn't, "Is this technology good?" The first question is, "Can we do this without risking our banking license?" If the answer is unclear, the project dies in committee. Doesn't matter how good the technology is. Doesn't matter how much cost savings it generates. If compliance can't sign off, it doesn't happen. Ripple having full EMI authorization in the EU means the answer is now, yes, this is fully compliant. That green light accelerates every partnership conversation. It shortens sales cycles significantly. It reduces legal review dramatically. It makes the decision easy instead of risky. Let's get specific about what this EU license unlocks. First, RLUSD expansion across European markets. Ripple's stablecoin currently sits at over $1 billion in market cap. Growth has been concentrated in the US and Asia. Europe has been slower because European financial institutions require regulated issuers. Now that Ripple has full EMI status, European banks can custody RLUSD. European payment firms can integrate it into settlement flows, and European enterprises can use it for treasury management. That unlocks a market of hundreds of millions of people and the second largest economy in the world. Second, Ripple payments scaling across European corridors. The platform currently processes over $1 trillion in annual transaction volume. Most of that runs through Asian corridors: Philippines, Thailand, Mexico, Brazil. Europe, the world's second largest economy with massive intra-regional payment flows, has been underutilized because compliance complexity slowed adoption. With full EMI authorization, Ripple can now pitch European banks, fintechs, and remittance providers without regulatory friction. That could double transaction volume if adoption accelerates. Third, competitive positioning. Circle went public and reported strong quarterly revenue, growing fast. But Circle focuses primarily on stablecoin issuance. They don't have Ripple's payments infrastructure. Tether dominates with massive market cap, but lacks institutional trust and transparency. Traditional players like Swift have the relationships, but lack the technology. Ripple sits in the unique middle position with compliance credibility, infrastructure depth, and now full EU regulatory status. That's strategic leverage. Fourth, partnership acceleration with Tier 1 European banks. Ripple recently extended collaboration with Guarantee BBVA for custody services, secured a deal with Riyadh Bank in Saudi Arabia for blockchain applications, both announced before the EU license. Now imagine what partnerships Ripple can sign with European banks that were waiting for regulatory clarity. Deutsche Bank, BNP Paribas, Santander, ING. These are trillion-dollar institutions with global networks, massive payment volumes, and deep institutional relationships. They move slowly, but they deploy capital at scale when compliance boxes are checked. Here's the macro context retail misses. Europe is ahead of the US on crypto regulation. The MiCA framework is fully operational, giving the EU clear rules. The US? Still waiting for the Clarity Act. Still dealing with jurisdictional fights between SEC and CFTC. Still operating in a fragmented regulatory environment. That regulatory head start means European institutions can adopt crypto faster than American banks waiting for clarity. Ripple securing full EU authorization positions them to capture European adoption momentum while US competitors wait. First mover advantage in a market worth trillions. Now let's address the price action. Ripple announces full EU regulatory approval, arguably one of the biggest regulatory wins in crypto, and XRP barely moved, still trading around where it was, minimal bump. Retail sees that and thinks the market doesn't care. Retail is wrong. Here's what actually happened. First, the market already priced in conditional approval risk when Ripple announced preliminary clearance weeks earlier. That news briefly moved XRP higher before broader market weakness pulled it back. The full approval announcement was confirmation, not surprise. Markets move on surprise. Confirmation prevents downside. XRP held support instead of dropping significantly during the broader crypto sell-off. That's bullish price action even if it doesn't feel exciting. Second, macro headwinds are overwhelming micro-catalysts. Crypto products saw massive outflows, Bitcoin dropping, Ethereum falling, everything red. When macro risk-off dominates, individual catalysts get ignored temporarily. Institutions aren't ignoring the EU license. They're waiting for macro conditions to stabilize before adding exposure. Third, regulatory approvals don't create instant utility. They create permission to build utility. The EU license doesn't make European banks start using XRP tomorrow. It enables them to start using XRP over the next several months as partnerships get signed, infrastructure gets integrated, pilot programs scale to production. That timeline doesn't excite retail traders wanting quick moves, but it excites institutional allocators planning positions for next year. Fourth, institutional buyers accumulate during consolidation, not rallies. When XRP pumped massively last year, institutions weren't buying. Retail FOMO was. Institutions sold into that rally. Now that XRP has consolidated back to reasonable levels, institutions are accumulating. On-chain data confirms this. Long-term holder supply increased. Whale wallets remain at all-time highs. Large transactions hit elevated levels recently, highest in months. Not panic indicators, accumulation signals. Coming up next week is XRP Community Day. This isn't marketing. This is Ripple setting the strategic roadmap for the year. 3 global sessions covering all major time zones, ensuring global participation. CEO Brad Garlinghouse, President Monica Long, and CTO Emeritus David Schwartz, headlining with specific topics that signal exactly where Ripple's priorities lie. If you know how to read between the lines, if you understand how institutional communications work, this event tells us exactly where XRP is headed. Garlinghouse kicks off with The Era of XRP in Capital Markets. That title is deliberate, every word chosen carefully. Capital markets, not payments, not remittances, not DeFi speculation. Capital markets specifically. That signals institutional treasury adoption at scale. That signals continued ETF expansion and potentially new financial products. That potentially signals XRP integration into prime brokerage services through Ripple Prime for institutional trading desks. That potentially signals collateral use cases in institutional lending markets where XRP could serve as high-quality liquid asset for posting margin. He'll discuss regulatory clarity progress across multiple jurisdictions, including updates on the Clarity Act timeline and Ripple National Trust Bank application status. Institutional infrastructure readiness for enterprise adoption. XRP's strategic positioning within global financial systems as the bridge asset connecting fragmented markets. Translation: he's pitching directly to institutions and allocators, not retail traders looking for quick flips. Monica Long follows with a deep dive session on why XRP sits at the absolute core of Ripple's evolving business strategy. This is where we'll hear granular details about RLUSD integration plans across Ripple's entire product suite. How RLUSD and XRP work synergistically together rather than competing for the same use cases. Wrapped XRP technical implementation and expansion to other major blockchains like Solana to bring XRP liquidity into thriving DeFi ecosystems outside XRPL's native environment. How XRP strategically fits into Ripple's massive acquisition strategy, spanning Hidden Road for prime brokerage capabilities, G-Treasury for corporate treasury software that serves Fortune 500 finance teams, and Rail for stablecoin payment infrastructure connecting traditional banking systems. Those enormous acquisitions only make strategic sense if XRP and RLUSD are absolutely central to the unified business model going forward. Long will connect those dots and demonstrate how everything fits together into a cohesive institutional financial stack. David Schwartz runs Community Q&A, where retail actually gets direct answers. Expect technical questions about XRP Ledger roadmap enhancements, DeFi expansion strategies, native lending protocol development that could enable borrowing and lending directly on XRPL without bridge risks, and whether XRP can realistically hit various price levels based on utility fundamentals rather than speculation. Schwartz doesn't hype. He doesn't speculate. He gives data-driven answers backed by technical analysis and realistic market understanding. If he says something bullish, it's supported by math and logic. If he delivers realistic assessments that disappoint the Moonboy crowd, it's truth that needs to be heard. Key topics: regulated XRP products, including ETFs, wrapped XRP and cross-chain integration, tokenization beyond payments, XRP Ledger programmability features, privacy tools, compliance infrastructure. Most important, Ripple's priorities around regulated finance, wrapped assets, cross-border liquidity. Watch for announcements about new banking partnerships in Europe following EMI license. Updates on Ripple National Trust Bank and Federal Reserve Master Account application. RLUSD market cap targets. G-Treasury integration timelines. Hints about additional acquisitions. Strategic read. Ripple doesn't hold Community Day to pump price short-term. They communicate long-term vision to builders, institutions, serious investors. If Ripple delivers substantive updates, institutional confidence builds. Let's talk ETFs, because this is where institutional money shows. XRP ETFs have accumulated significant assets with strong net inflows. Real capital. Not retail buying small amounts on Robinhood, institutions allocating millions. XRP ETFs saw over 40 consecutive days of positive flows. Dozens of straight days. Not speculation. Steady institutional accumulation. Compare that to Bitcoin ETFs, which saw outflows during the same period, or Solana ETFs, where flows dried up after initial enthusiasm. XRP ETF demand remained consistent even as price consolidated and macro deteriorated. That tells you institutions see value here. On-chain data confirms institutional positioning. Massive XRP transferred to Coinbase custody before ETF launches. Institutional prep work. ETF providers need custodied assets to create shares. That accumulation happened quietly while retail watched price. Then ETFs launched and capital flowed. Now, secondary effects. Exchange balances of XRP at multi-year lows. When supply leaves exchanges and enters long-term custody, that's structurally bullish. Liquid supply shrinks, price sensitivity increases. If you want to learn how to analyze institutional flows instead of guessing from influencer tweets, if you want frameworks for interpreting on-chain data and understanding custody transfer signals, if you want to think like an allocator instead of a speculator, that's what I cover in the comprehensive crypto course. We break down real-world case studies, teach you to track smart money movements, give you tools for data-driven decisions during volatility. This isn't theory. This is pattern recognition that works. Links in the description. Now the core question everyone asks. If RLUSD can do cross-border settlements with zero volatility, if banks prefer stablecoins for compliance, if the payments industry is moving toward dollar-backed tokens, what's XRP's job? Why does it matter? The answer surprises people who don't understand how institutional finance works. XRP and RLUSD aren't competitors. They're tools for different problems. Think construction company owning a crane and forklift. Don't do the same job even though both move things. RLUSD is the forklift. Stable, predictable, perfect for moving materials across warehouse floors. Businesses know exactly what they get. 1 RLUSD equals $1, always. No volatility, no conversion risk. Perfect for settlements where exact amounts matter. XRP is the crane, designed to lift heavy loads that can't move otherwise. Bridge asset for on-demand liquidity in corridors where pre-funding accounts is capital-intensive or stablecoin infrastructure doesn't exist. Real example, remittance company sending money from US to Philippines. Traditional correspondent banking requires holding pesos in Nostro account in Manila, ties up capital. With XRP ODL, convert dollars to XRP, send across XRPL in seconds, convert to pesos on the other end. No pre-funded accounts, no trapped capital. Real-time settlement. Could they use RLUSD? Maybe. But problem, Philippine side needs pesos, not dollars. Send RLUSD, someone still converts to pesos. Who provides liquidity? Market makers. Market makers charge spreads. XRP has deeper global liquidity pools than any stablecoin except the largest ones. Tighter spreads, better execution, lower costs for high-volume corridors. That's why on-demand liquidity using XRP grew significantly year over year. Utility scaling, because it solves problems stablecoins can't. Here's what nobody talks about. Every RLUSD transaction on XRP ledger requires XRP for fees. Those fees are burned, permanently removing XRP from circulation. As RLUSD scales from current market cap to much larger levels, transaction volume increases. More transactions mean more XRP burned. More burn means deflationary pressure on supply. Feedback loop where RLUSD adoption directly benefits XRP holders through supply reduction and network activity growth. Not zero-sum, symbiotic. Industry experts have noted that RLUSD's utility in emerging economies where stablecoins are used for transactions and savings will significantly boost XRP adoption. Those markets use RLUSD on XRPL. Using XRPL means using XRP for fees, liquidity, settlement in corridors where stablecoin infrastructure is underdeveloped. XRP's job isn't disappearing, it's evolving, becoming the infrastructure token powering settlement, liquidity, fee payments across multi-asset financial networks. Let's wrap with what matters. This week, Ripple unlocked tokens, market didn't panic. Institutional maturity. Ripple secured full EU regulatory approval covering multiple countries and hundreds of millions of people. Infrastructure scaling. Ripple announced XRP Community Day, where leadership outlined strategy for the year. Transparency, long-term thinking. XRP trading at reasonable levels. Not exciting for moon boys, exactly where smart money wants it. Consolidation creates accumulation opportunity. Weak hands sell to strong hands. Retail capitulates. Institutions buy. Pattern repeats every cycle. Happening now. Fundamentals unchanged. RippleNet processes massive annual volume. ODL grew significantly year over year. RLUSD at over $1 billion market cap. XRP ETFs accumulated substantial assets with dozens of consecutive days of inflows. XRP Ledger processes millions of daily transactions. Not speculative metrics, real-world use cases scaling in production. Regulatory picture clearing, SEC lawsuits settled. RLUSD launched with regulatory approval. Ripple National Trust Bank conditionally approved. Full EU EMI license secured. Over 75 global licenses. More compliance infrastructure than almost any crypto company. Creates permission to build utility at institutional scale. So what's XRP's job now that stablecoin payouts are here? Bridge asset for corridors where stablecoins don't work efficiently. Fee token powering XRPL network that settles RLUSD and tokenized assets. Liquidity layer connecting fragmented markets. Infrastructure token for the institutional financial system Ripple is building. That job hasn't disappeared, it's evolved. This week proves institutions understand this even if retail doesn't. Regulatory delays don't change this. Monthly unlock pattern doesn't change this. Short-term price consolidation doesn't change this. What changes is execution. Can Ripple scale RLUSD significantly? Secure Federal Reserve master account access? Convert European regulatory approval into actual bank partnerships? Those questions matter. We'll start getting answers next week during Community Day. Stay ready, stay liquid.